Hello everyone, welcome back to my channel. Today I'm going to be sharing about the first home savings account. So if you're a resident of Canada, you are at least 18 years old, come close, this video is for you. So I'm going to be sharing what the first home savings account is, who is eligible for to open the account, and how much you can put in the account, and for how long you can put money in this account. So come close, let's learn together. So just a disclaimer, this is my own personal journey. I am not an accountant. I am not a financial advisor. If you're seeking professional advice, I would recommend you seek like an accountant or someone registered professionally in finance that can help you out. This is my personal journey. I am just sharing. So what is a first home savings account? So a first home savings account is a tax sheltered or tax-free account. A resident of Canada can put money into it to use as a down payment or towards a first home. So the eligibility criteria is you have to be at least 18 years old and older, and you have to be a resident of Canada, and this money has to be used for a first-time home buyer. So if you have a home either solely or jointly, you do not qualify for this account. So again, the eligibility criteria is you have to be at least 18 years old and older. You have to be a resident of Canada, and this has to be for a first-time home buyer. So yeah, so that's what the first home savings account is and who is eligible for it. So it says it's from the name first home savings account. It says savings account, but it's more of an investment account because you can use this account to buy GICs. You can buy ETFs in it, and so GICs are what like an investment option that guarantees your money back and some interest to it. So you GICs, you put money into the account, it's locked in for a certain period of time, and then you get your money back with some interest to it. So this account you can use to invest and grow your money, and any interest you earn from your money is tax free. So that's why it does the name first home savings account, because when you do take the money to buy a home, your first home, it is tax free. So any money you take out of the account towards a first home, it will be tax free. So this account was introduced about 2 years ago, back in 2023. So the aim was to help first-time home buyers to be able to afford a home due to the increased standards of living and cost of houses in Canada. So this was introduced to help first-time home buyers secure a down payment and be able to afford a home. So this account, as I said, it's a registered account which is tax free. So it almost it puts together the benefits of a tax-free savings account and RRSP together, because the first home savings account, sorry, you can use for investments, and the money you take out to buy your home is tax free. So it's like a tax-free savings account and an RRSP account put together, all the benefits of both accounts put together in one. But unfortunately, it's just for first-time buyers. So if you're a first-time buyer, this is an opportunity for you to grab, to save money into this account, invest into this account, and then you can withdraw the money tax-free towards a down payment for your first home. So how much can you put in it every year? So there's an annual limit of 8,000 per individual. So you can put up to 8,000 in it, and a lifetime limit of 40,000. So you can put from anywhere from 8,000 to 40,000 for the lifetime limit, which is 40,000. I would recommend you max out every year. If you're looking to buy your first home, you max out the contribution limit every year, which is 8,000, because this will be is a tax sheltered account. So you can use it as a tax advantage when you do file your taxes. So it has all those benefits. I would recommend, if you're a first time home buyer, you use this account. So as we mentioned, investing in the first home savings account, you can buy GICs. Some banks do have some good interest rates on just the regular savings account, the first home savings account. So you can use that opportunity to grow that account. So how long can you have money in that account? So you can have money in that account for up to 15 years. For example, if you are 20, you have to, and you've reached your lifetime limit, you have to take that amount out to buy a home by 35. Because if you don't take it out, you'll be required to transfer it, or if you don't use it to buy a house, you can transfer it into an RRSP account, which is a tax deferred account, or you can transfer it into a RIF account. So I can explain more of this in another video, but you can do your own research as well. I always recommend you do your research and get more information and speak to a trusted professional, and then yeah, you can move forward. But the most important thing is you take action at the end of the day. So if you're a first home buyer in Canada, you are a resident of Canada, you are at least 18 years or older, this account is a very great account if you're looking to buy a home, to build your family. That this is a very great account. So yeah, so withdrawals, how do you withdraw money from this account? I've mentioned a couple times that it's used towards buying a first home in Canada for a Canadian resident. So you can withdraw money from this account to purchase a home, and it's 100% tax free. Unlike an RRSP account, when you have that option to withdraw from your RRSP to buy a home, and you have to return that money back into your RRSP within time, or is being considered income. This account is 100% tax free, and so you can use that money for your down payment, your closing cost. So it's really great for a first time home buyer. So this is a really good account. I really encourage you to look into it, especially if you're thinking about buying a home in Canada, building your family. Just a note though, this is not an for if you're looking into buying rental property, this account is not for you. This account is specifically for first-time home buyers, to help first-time home buyers be able to afford homes in Canada. So if you're an investor looking to save into this account to buy rental properties, I would not recommend you use this account. You are going to end up paying taxes. This is meant for first-time home buyers to help with the affordability crisis. So what are the benefits of this account? I guess by this time we can all say the benefits of this account. It's tax free, so any money you take out of it towards buying a home, it's tax free. You can earn good interest on the money you pay, you put into this account. For example, I think EQ Bank has a GIC rate of up to 2.75%, 3% locked up within a certain time, or you can get 1.75% in this account. So it's a really good account to look into, to do your research. Main banks as well do have this option to open this account and invest in it as well, like RBC, TD, BMO. So just do your research. Whatever bank you're with, you can book an appointment with an accountant or a financial advisor. You can speak with them, do your research, and yeah, and look into it, especially if you're looking into buying a home within the next few years as a first-time home buyer. I will highly recommend this account. So I was mentioning about some differences between the first home savings account to a registered retirement savings plan and a tax-free savings account. With the first home savings account, as I mentioned, every money you take towards buying your first home, it's tax-free. If you're looking into just investing and saving into your RRSP, you can do that and you can use it towards your down payment. But you have to remember that with any withdrawals from your RRSP towards buying a home or towards education, that money needs to be paid back into your RRSP, because the main idea behind an RRSP is for retirement. So any money you take out before retirement has to be put back in, or else it will be considered as an income and you have to pay taxes on it. And then the difference between the first home savings account and the tax-free savings account is they all are both tax-free, and you can both invest in GICs and earn good interest in it. But most people do fall into the temptation of using the money in their tax-free savings account for other purposes. But in a first home savings account, this money you're putting in here is going to be used towards my down payment for my home and for my family home. So that money it's meant for a particular reason, and you will not be tempted, like you're limiting the temptations for using it for other purposes. So yeah, that's a first home savings account, what it is, and who is eligible for it, and how much can be put into it, and for how long. And let me just go over the points so we are all clear on what a first home savings account. So again, a first home savings account, it's for a Canadian resident who is at least 18 years old or older, and it's a first-time home buyer. So it's a tax-free account or tax-sheltered account that you can use towards a down payment for your first home. So this money that you put into a first home savings account has to be used for down payment towards a first home. You cannot use it as a second home buyer. You cannot use it towards rental properties. You have a contribution limit for up to $8,000 a year and a lifetime contribution limit of $40,000. So this is the information about first home savings account. As I said, if you have any questions, you can drop them down below and do your research and speak to a licensed professional if you have any further questions. And yeah, so that'll be it for the first home savings account. Thank you for watching my video. If you have any questions, leave me a comment. Don't forget to subscribe, like, and share.